Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so the XJO for the first time in a while pulled back and closed below 74.80. Okay, ever so slightly, not by much. Is this the top or is this just a bit of a breather? That is the $1,000,000 question. You can see here we've taken a pretty sizable move this year when we came back after Christmas, and at this point of time sitting roughly 6% off the uptrend and about 6% up for January. Big move, and I think really need a bit of a breather here. Makes a bit of sense, okay? Whether that breather means slightly down to sideways or whether it means actually a reasonable pullback to 73.50, we'll soon find out. But nonetheless, I think all uptrends have counter trend moves, and I think we're due for one here at the moment. Now, I'm not expecting a big move right back to this longer term sort of trend here. That trend is actually non-proven. Like we still need more touch points on that trend line. We've only got sort of one or two. We only got two touch points, right? Need a third touch point to really make that a valid line. I do actually think a bit of a slight pullback into 73.50, and then we could go for a challenge into the all-time high coming into the reporting season. And typically we rise into reporting seasons, guys. Okay, unless something dampens the current mood, and current mood has been fairly bullish recently. I suspect further upward movements on the horizon. But this market needs a breather first, right? It's just gone way too hard, way too quickly. All right, so then coming across the S&P 500, a bit different to what we've seen today on our session. We actually saw a reasonable pullback last night. Before that, though, before we did pull back, they did break the pennant. They came to test 4100, which is the next key resistance, and now we're seeing a small bearish signal. This bearish signal to me, look, it's probably just a bit of profit taking ahead of the Fed. Okay, I'd expect it to get back down near, maybe that 200-day average, maybe this tentative trend line that I've thrown through here. Worst case, probably back towards this longer term upward trend line. But once again, a bit overbought. Needs to have some kind of a breather. And I think a small breather is going to happen through here, and then depending on what the Fed says, will depend on what happens next in this space. But it's quite interesting to see that downtrend line break. Okay, that was a clear break of the downtrend line. We're now seeing higher peaks, higher troughs above the 200-day moving average, which to me is a very bullish sign. Okay, that little bit of a higher peak, higher trough above there says to me there's willingness to buy. Okay, above that 200-day average, which you generally don't see until the end of a trend. So there's definitely strong signs here, strong early signs of the trend changing. But even more importantly, I'm watching this NASDAQ chart. And you can see the channel tried to break the other day on the NASDAQ. Now, it has pulled back in overnight, come back to sort of roughly around this short-term uptrend line here. Once again, I think a couple of days of selling is on the table on the back of some, just some profit taking, guys. Like people who's going to lock some profit in before the Fed announcement. And then depending on how the Fed talks will depend on where this market rolls next. But, definitely seeing that downward trend line break, which is a sign of something changing. Okay. That's either a shallowing of the downtrend or a change of trend. And now that we've got higher peaks and higher troughs, it's starting to lean towards an uptrend, but definitely need a break of that resistance, a proper real break of that resistance before I'm going to call this. Okay, we're close, but I'm not quite jumping in just yet, guys. Okay, just want to be a little bit conservative here and just make sure that this does break higher. And if it does, then you've got your triple bottom pattern that's suggesting a move back up near 13,000 here. So we're close. I think we'd be fairly close to moving back into this space. Let's just see. Okay, let's just see. So first things first, probably one of the most important things coming out of this week is the Fed announcement, and that is going to come through for us 6 o'clock Thursday morning our time. So, pretty much pre-market Thursday, we're going to start reacting to this. Okay. Yeah, so the Fed's expected to lift rates by 25 points, no surprise. Okay, that has been cooked in for quite some time. That's what really caused the rally through January, is when those expectations dropped dramatically of the Fed lifting rates. Originally, it was 50 points rise for Jan, that went down to 25. Most of the Fed watch tools that I'm looking at are suggesting 25 for Feb, 25 for March, and then rates are going to sit on hold all the way through to around about September, October, where we'll start seeing interest rates come back down. So at this point of time, look, yeah, it's. I think the market's trying to price in the top of interest rates, guys. Okay, now that mood could change, but for now, that's the mood, right? And unless the Fed changes that or another piece of data comes out, I really do think that the markets can continue to kick higher. So your biggest challenge to this right now is the Fed, because if you look at all the other data, it's suggesting, you had price index data on Friday suggesting prices are coming down. Inflation data came in a little bit better than expected for CPI out of the US. But then you've also got strong job numbers. So, it seems the US might be a little bit sort of protected from a hard landing at this point of time. Right? Yes, we've got weak data coming from the US. Yes, the US economy is slowing down, but it doesn't seem to be yet slowing at a pace that's got us worried. So I think at least for the next few months, we can see some movement back in towards growth. And then each month, we're just going to be analyzing the data. What's it telling us? Is it telling us soft landing with inflation coming down? Tick, keep buying. No, it's telling us something different. Time to sell out. And that's the type of market we're going to be in this year. Okay, so for now, unless the Fed says something stupid Thursday morning, it looks like the US is set to rise overall. But just don't forget, short term, looking a bit overbought. Need a bit of a pullback, guys. Pullbacks are healthy enough trends. If this ends up being one of those, right? I'm leaning towards yes, but I don't want to commit until I see a break of that resistance on the Nasdaq. RBA is also expected to follow the lift rates on Tuesday. So, yeah, Tuesday next week, we'd expect another 25-point increase from the RBA, especially after that higher than expected CPI reading. But although we did see weak retail sales, and retail sales plunged for December, considering there was a lead up to Christmas, we're expecting a pretty big pickup. That's not the case. So maybe we're actually starting to see a bit of a turning point here as well. It's interesting on the inflation front for Australia, we've always run a bit slower than the US. So as the US was increasing in inflation, we weren't increasing that quickly, right? And then now it might take a couple of months to catch up. So we're still going up as they're coming down. Hopefully that means we're coming down soon as well, right? So look, for me, the next two big things are the Fed and the RBA. Once we're through that, if it all remains positive, I'd expect the markets to keep climbing. We've got Aussie reporting kicking off mid of Feb. Okay, so that's not far away at all. Typically, our markets kick up into the reporting season and then take a bit of a breather through the dividends, right? So expect a run up through Feb, up to sideways through Feb now. I'll start again. Small pullback, okay, because we need to take a breather, right? So I think a small pullback here somewhere coming into the Fed and RBA. If the Fed and RBA behave themselves, I think that we'll see a nice little rally through the reporting, okay, hang up to sideways through the end of Feb, and then we'll roll over at some point end of Feb, March, and give a bit back as we go into the div period. Okay, so typically that's what I'm kind of feeling for our market at the moment. Okay, now the other thing that I'm watching very closely is iron ore. Iron ore's opened up and held strength. If that changes, if it keeps either running up or if it falls, that's going to change my view of the market locally a little bit as well. Because one of the reasons why we're up here is that CBA is at all-time highs, guys. Right? It's reporting in Feb, so it's likely to hold and run a little bit more even. Right? But the miners, wow, the big three, right? Fortescue, Rio, BHP, well, they're also sitting at very high levels following iron ore and other commodities higher. So that is also very important if you're trading the index here in Australia. Okay, so if you are trading XJO, you're going to be looking at your banks and your miners. That's the biggest weighted space, and both are at very high levels at the moment. The question leaving us to the question of whether it's going to keep going higher or pull back a little bit. There's definitely room for some buying in our discretionary and our tech stocks soon, guys. Okay, so that growth space of our market, it's not big, but there's a few good names there to be looking at. So watch for the Nasdaq chart. If that Nasdaq chart breaks resistance, there's ways of trading that. You can buy an ETF. You can buy, if you want to trade it with a bit more leverage, you can trade it through a mini warrant here on the Australian market. Otherwise, you can just start looking at ALL, Aristocrat Leisure, those types of stocks, Car Sales, Seek, Domain Group, which are all sort of that interest rate sensitive type stocks. So yeah, there's plenty to trade here. West Farmers is still fairly low relative to where it was at its peak. There's plenty of beaten down stocks in our market too that deserve perhaps a little bit of buying if we think interest rates are topping out soon. Okay, so let's just see. Right, I'm happy to wait a week. Right, I'm really happy just to sort of wait and see what the Fed has to say, see what the RBA has to say, miss some of the move up, get some confirmation, and then get in. Right, that's where I'm sitting at the moment. All right, so probably not much else to say, guys. I'm a little bit more sidelined until the Fed announces. We'll see, reassess after that, and we'll go from there. So thanks for listening in. I'll catch you all next week. Bye for now.